Hi guys, welcome again to Fit with Sin. All of us want to be healthy, wealthy, and wise. I'm Aditya, and I bring to you people who are true experts on the topics that we love. You can listen to them and you can ask them your questions right here if you're listening to this live. To find out about the next episode in advance, you can follow us on Instagram and on Telegram at FitRichSane. As a community, we believe in action. That is why we will simplify the process for you, bringing it down to small, actionable steps that you can take today. Today's guest, Zakhil Suresh, is a longtime advocate for responsible crypto investment practices, and he is the founder and CEO of BitSafe, a crypto investing platform. He has also cleared level 3 of the Chartered Market Technician course and was ranked 3 in the CMT Investment Challenge for risk adjusted returns. By the end of this podcast, you will learn the basics of cryptocurrency, blockchain, tokens, altcoins, NFTs. Should you invest in cryptocurrency? And most importantly, relatively safe ways to make this investment. Thank you for everyone for joining in and for making these live podcasts fun and useful. Let's become successful crypto investors with Zakhil Suresh. So Zakhil, our community, and I assume that most of the listeners will be very adept at understanding equity, mutual funds, and stocks. But as far as crypto is concerned, you will have to explain all your answers like we are 5 years old. I hope that works.
No worries, no worries. I mean, I'm so used to doing that for so many years, so love to do that. Yeah.
Hopefully, the culture of crypto will, at least the understanding of crypto will grow in India very fast, and you won't have to do that any longer.
Yep, yep.
So, Zakhil, did I miss out anything in your introduction?
No, no, I mean, thanks, Aditya. It was really nice to, maybe go through the journey so far and sum it up. Probably, been pretty active in the space since 2017, honestly. Of course, I started investing like 10 years back, but pretty active since
Right.
2017. Worked with a couple of big brands earlier. Right now, had that journey as a trader as well, before finally deciding to, build something on our own. So yeah, looking forward to this.
Zakhil, let's start with the very basics. So, in your words, what is crypto and what is blockchain?
So I think a good way to describe it would be maybe look at what we already know, right? Maybe
That's
let's
great.
look at how global banking works. For example, let's say I want to send some money to one of our friends in US, or let's say in
Right.
UAE, right? So you go to the bank, and there's a international network of Swift. Typically, these transactions take 2 to 3 working days to be settled because there's multiple currencies involved, multiple banks involved, multiple ledgers involved, and because of multiple parties being involved, the cost of doing it is also a bit on the higher side, right? Uh,
Right.
then came the likes of PayPal, Venmo, all that, and they said, we're going to settle it instantly. Let's say if I send money to, if I have some balance in my PayPal account, and then there's someone in UK for that matter whom I want to pay something to, and I send, I if I'm transferring the funds to him, they get it instantly because unlike a traditional banking system, PayPal doesn't have multiple ledgers. It's primarily just one
Mhm.
ledger where everything is recorded. Right now, you can consider blockchain as something like a PayPal, or like a single ledger, but not really having that PayPal or Venmo sitting on top, and verifying or rejecting your transactions. So in effect, it's a ledger which is distributed. With it's like whenever I send money to you, everybody, like every network participant records that transaction, which means no one can cheat each other. And you're not dependent on like a bank or a or a centralized authority to basically check or verify or reject or approve your transaction. It's done by a decentralized network of participants who constantly support the network and verify these particular transactions. So that is how, I mean, that's how blockchains typically work. And now every
Sachin,
blockchain
could
has
you
its own.
elaborate a little on Ledger?
Sure, sure. So let's say, since you're talking about 5 year olds, like let's assume
Exactly,
we're all
right.
sitting in a class, right? And then let's say we all have our own notebooks where we have written that, let's say I have 5 candies and you have 3 candies. And now let's say there are 16 of us here, right? And all 16 of
Right.
us have written in our notebooks that Aditya has 3 and Sakil has 5. Right now I'm giving you one of those candies, right? Then how does it work? So let's say then all 16 of us will record in our notebooks that I have given you one, and then the
Okay.
net number is 4 and 4, right? So now even if one of us, or let's say if you try to go and bribe someone and say that
Mm.
maybe you just change it to 6, right? But then you have other copies out there which says that it's 4 and 4. So that's how the network maintains its integrity at the end of the day. So it's very, that's why we say, right, like blockchain, it's immutable. No one can go and change it because there are hundreds or thousands of copies of these transactions distributed around the globe in multiple devices. So that is why no one can go and basically change any of these transactions. And that's why people say that maybe if we conduct elections on blockchains, for that matter, it will be very
Right.
difficult for someone to go and manipulate the results or whatever. So that's how blockchain, I mean, if I have to break it down to a very simple level, it's primarily like a notebook which everyone keeps, and all the transactions are recorded by everyone, so that and we don't have to rely or trust a single person to verify any of the transactions. So yeah, I mean, I
So
hope
Zakir,
that.
is every
Yeah.
cryptocurrency on blockchain? Is every cryptocurrency is all the ledgers maintained on blockchain?
So blockchain is the ledger. Right. So I think so. Basically, the term for the ledger is basically blockchain. And now
Yeah.
coming to cryptocurrency, every blockchain has its own currency. For example, the Bitcoin blockchain
Okay.
has Bitcoin, which is the currency. Ethereum blockchain has Ether, which is the currency. Or Litecoin, blockchain has Litecoin, which is the currency. So you can, let's say, if you again compare or consider this as, let's say, Bitcoin as India, or and Ethereum as UAE, for that matter, right? So
Right.
let's say Bitcoin blockchain is equivalent to India, then INR is equivalent to Bitcoin, the currency,
Right.
right? Or let's say Dirham is equal to Ethereum, or Ether, the currency of that particular blockchain. So every blockchain has its own native currency where you pay for every service, on that particular blockchain. So that's how that distinction happened. Um, and and I think the challenge for people to comprehend this comes from the fact that we all are so used to seeing currency as something that is issued by a central bank, for that matter,
Right.
right? Or
Right.
let's
Right.
say and the moment you say it's an asset, people think that, okay, how do I see this asset? Like, what is the underlying value of this asset? But the way I look at it is, let's look at it as a technology at the end of the day, right? Where it's a piece of software, it's a piece of code, and let's say if we all purchase softwares, right? And
Right.
even though there is no underlying or there's nothing tangible about that software still has value because of whatever it's been able to do, right? So I think that looking it from that lens sort of makes it a lot easier to understand why or from where the value is coming from for these kind of assets.
So just touching upon something you said. So in the blockchain, you're saying that every transaction that is done, whether I give a fraction of a Bitcoin to you or you pay to somebody else, every transaction is visible to everyone. Is that true?
It is true. It is true. Unless there are some blockchains like uh, Monero. Uh, so these are called privacy blockchain, where they've sort of shielded it, so it's not fully visible to the public. But that's very, that the number of such blockchains are very, very less. So we can assume that 99% case, all the transactions that happens on blockchain, it's publicly visible, and that's the beauty of it. No one can hide anything. It has that authenticity and integrity. And yeah, I mean, if recently, if you guys have been hearing, Robert Kiyosaki, the writer of uh,
Right.
Rich Dad Poor Dad. He was highlighting this point. Like, blockchain has that integrity because it's all public, it's all transparent. There's nothing anyone can hide or cheat, basically, right? Which is, let's say, if you're relying on a centralized system, then you are basically dependent on a regulator or someone to make
Right.
sure that everything is fine. But here, you yourself have that ability to go and make sure that things are whatever someone is telling you is true, because there's data on the blockchain which tells you whether it's true or false.
Okay, so one thing we can definitely assume is that all the transactions are extremely transparent. But then my question is, do you think blockchain and crypto as such will, as of today, they are primarily investing and trading avenues, I believe. Do you think they will remain such, or do you think one day they will change the way we transact in our daily lives, or do they have any other purpose as well?
See, I mean, whatever we are seeing right now is, it's a very base level use case of whatever these things are capable of. For example, crypto or this whole settlement of money is just one layer, or it's primarily the first use case of this technology. I think, see, we all right now, we're speaking on Telegram, and I don't know how many of you've noticed. Telegram recently launched their own blockchain called Ton, uh, with a
Okay.
native token called Ton, and it's basically, I think it's already in top 10. It's doing extremely well because they've immediately onboarded such a large number of people that are already using Telegram as an app, right, to this crypto
Right.
ecosystem. And they've introduced this whole settlement of money within each other. So it's beyond trading, we are talking about, right? So let's say if you have Ton, or I think they also have integrated Bitcoin also within Telegram. So you can, let's say, if you want to buy something from someone, and the other person is willing to settle it in Bitcoin, Telegram right now facilitates that. Right. So
Okay.
these are things that are happening right in front of our eyes. And if you actually look at it, uh, every payment giant, you name it, like, let's say Mastercard, Visa, PayPal, all of them are actively working on blockchain, on crypto products right now. Like, Mastercard just announced, like, few days back, that they're launching a debit card which lets you spend your crypto directly from your personal wallet. So it's
Okay.
becoming more than trading and investing and all that. And I think there's an interesting use case that which we all will soon start seeing. With this whole AI boom, there is
Right.
a question of authenticity. Like, so let's
Right.
say the sort of data that we are feeding to AI, or to make AI better. Now there's no way to authenticate that data, right? Now, via blockchain, it's possible. Like, there's a use case that has come up, where blockchain, or let's say this cryptography, at the end of the day, can be used to make sure that the data that is being fed into AI models are truly authentic. Another huge market that is booming right now is tokenization of real world assets. Like, gold is being put on blockchain. Treasury bonds in US are being put on blockchain. Dollar itself is being put on blockchain, right? So these things are becoming a thing, and because of how fast these things can be transacted and settled on blockchain. I mean, I think couple of months back, SEBI chairman was also mentioning the fact that stocks, I think it still takes T+1 for
Right.
settlement, right? But
Yeah,
in,
that's
in
true.
crypto, it's almost instant because of how fast these blockchains are. So if you can put these kind of assets or have a digital version or a blockchain version of these assets, the settlement becomes faster, and there's no risk of someone changing the data or anything of that sort. So we'll start seeing these multiple use cases. I keep saying, the next 5-10 years, it's going to be like that dial up to broadband phase that we saw for internet, right?
Wow.
I think crypto is sort of entering into that phase where we'll see more and more real world applications being created. I don't know how many of you are aware, like Flipkart is actually building its reward program on Polygon blockchain right now. So it's actually live for some
Okay.
of the users, I guess. So and you won't even realize you're interacting with blockchain, or you're actually buying and selling NFTs. But that's the way they've designed it, and so it's very interesting what's all going on. And even during COVID, I think Maharashtra government was issuing the COVID certificates on blockchain, making sure that
Oh,
no one can go back and change the results, or edit
wow.
those. So these things are frequently happening, and I think we'll start seeing more use cases coming in the coming years.
I had absolutely no idea that we were this surrounded by blockchain even today.
Yeah.
That's amazing. So, just to understand this a little better, Zakhil, so let's take the example of the two biggest cryptocurrencies that we know by market cap, Bitcoin and Ethereum. So, what we understand is that it's just two currencies like INR and USD or anything else.
Mhm.
Is there any difference in the tech or the usability in them, or are they just two different currencies? That's it.
There are see, from a currency point of view, there isn't
Right.
much of a difference. But I think how we should look at every project, in crypto, is primarily there are two components. One is the software component, and then the asset component. For Bitcoin, it is Bitcoin blockchain, the software, and the asset, which is BTC. And for Ethereum, there is Ethereum blockchain and Ether, which is powering, or which is the asset of that particular blockchain. Uh, in terms of and let's say every software has its own purpose. For example, let's say we use Photoshop to edit photos. We use
Right.
WhatsApp for messaging, our friends and family, right? The similar way, blockchain. So Bitcoin blockchain is primarily designed for security.
Okay.
So let's say it's the most secure blockchain out there, because I don't know. I mean, we don't want to try to get too technical today, but
Right.
there are multiple ways a network is being safeguarded, and Bitcoin still uses the most secure way, which is called proof of work, where you plug in this graphics card machines to support, or
Right.
making sure that your transactions are super secure. So that is the primary goal of Bitcoin blockchain, and its use is very limited. I mean, there's nothing much to do with that software, uh, other than, let's say, having an ability to transact or settle money at a very cheap cost, almost instantaneous. But on the other hand, uh, Ethereum is more like a app store. Like it's more like a
Okay.
decentralized app store where developers can come and create more apps and deploy those apps. So it's a very it's a lot more developer friendly, I would say. So you can consider it as, like I said, a decentralized app store where there's so many applications being built. And for example, there is this app called Uniswap, which is a trading exchange,
Okay.
but it almost does volumes like any other stock exchange, or any other crypto exchange in the world. So these apps are completely built on Ethereum in a very decentralized way. So there is more scope for Ethereum as a blockchain compared to Bitcoin. But like I said, these two does its own. There are the persona is very different. People look at Bitcoin as a digital gold, or a stable store of
Right.
value. But on the other
Right.
hand, Ethereum is looked at as this global supercomputer, where they can build things. They can innovate, do a bunch of things, right? So and it's the same if you start looking at other, let's say you take Solana for that matter. It has its own differences from these two, right? So every project you can basically look at it as different companies doing different things, right? So yeah, it works completely in a different way, but at the end of the day, both lets you transact or settle value at a very cheap cost.
I'm a little confused here, Sakil. What do you mean when you say it's that Ethereum is developer friendly and like people can develop on it? What does that even mean?
So developer by developer friendly, I mean, I'm not saying that you can't go and build anything on Bitcoin, but so let's say this
No,
app, right?
like my
Like,
question is, what does even building on Bitcoin or
yeah, yeah,
Ethereum
yeah.
mean at the very
Correct,
basic?
correct. For example, let's say a few months back, you might have heard about, Google removing some of the apps from Play Store,
Right, right.
right? So that is because there's someone controlling that space, that or that app store
Correct,
or Play
right,
Store, right, where there's a centralized
right.
authority taking care of all that. But imagine Ethereum is like a decentralized Play Store, and you have deployed your app over there, or you have published your app over there. And
Okay.
just like App Store, there are ways to go and access these applications. Even someone was showing me on Telegram itself, there is a way you can actually go and access these applications. So if you don't, I mean, basically these applications that you deploy as a developer on Ethereum blockchain, no one can take it down, because there's no centralized authority. Just like how
Right.
we were talking about money being, sent, right? It's the same for applications also. Like there's nobody to take it down or control that in front of you. So this is a level of freedom, that you have for not basically having to rely on a centralized authority when it comes to these things. So that's what it means by a decentralized, app store or a Play Store.
Got it. Got it. So that's about Bitcoin and Ethereum. Now, going a little deeper, from what I hear, there are crypto coins and there are tokens and then there are altcoins. What are these
Mhm.
things?
See,
L-
crypto coins is primarily the native assets that we discussed, right? For example, for Bitcoin blockchain, you have Bitcoin. Ethereum blockchain, you have Ethereum. Uh,
Right,
so those are basically the crypto coins or crypto assets. Uh,
right.
Tokens are things that are being created on these blockchains. For example, uh, on Ethereum,
Right.
developers can basically create their own tokens. Or let's say if I'm a company and I don't want to issue equity. Got it. Like I don't
Okay.
want to issue shares, but I want to raise funds, but I don't want to, dilute my equity. Uh,
Right.
uh, so then I can go and issue a token on an Ethereum or a Solana or any blockchain for that matter and raise funds. And I'll have to create a utility for this token where, let's say I say, a part of my profit is going to be shared with the token holders, or the token holders will have
Okay.
certain privileges on the platform that I've created. So tokens are of multiple, it has, so there are security tokens which are similar to equity. There are utility tokens which
Wow.
basically give you things like voting rights, where you decide, uh, you know uh, you decide how a project has to be built and all that. And like I said, previously we were discussing about real world assets being tokenized, right? So let's say US dollar is being tokenized and the token is called USDT, Tether
Right.
USD, and then there is Circle USD. And let's say uh, this company in US called Ondo, which is tokenizing US Treasury bills. So all these are done as tokens or issued as tokens on different blockchains. So That's why, people say there are or let's say 20,000, 30,000 cryptocurrencies, but in
Right.
reality is that the coins or the actual assets are very less, but these tokens are very large because anyone can create it. I mean,
Okay.
if you go watch a 10-minute YouTube video for that matter, you can just go and create a token in like 5 minutes, right? It's that simple.
Interesting.
So and it's very simple. So that's why you have a lot of tokens, and you see, even if you open Twitter, Telegram, people, pumping and dumping tokens, right? Because some people create these tokens for the sake of, let's say, scamming people or whatever. So that's why when it
Mm.
comes to tokens, you have to be extremely careful about who is issuing it, what is the utility, how much the founders are holding. There's so many things about when it comes to tokens. I think the third thing that you asked was altcoins, right?
Altcoins, right.
Altcoins is nothing other than, everything other than Bitcoin is actually referred to as altcoins. The full
Okay.
form is alternative coins. So
Okay.
the the theory is that Bitcoin is the first one, and everything was
Right.
created as an alternative to Bitcoin in some way or the other, trying to be a better Bitcoin, or trying to do something that the Bitcoin cannot do. Right. So it's like a collective name for every other coin other than Bitcoin.
Okay, that's fantastic. So coming to the part that most listeners usually wait for. So one thing, correct me if I'm wrong here. 90% of crypto projects and cryptocurrencies that are created ultimately fail in the long run, right?
Right.
So now my question is that when we invest in equity as investors, we have certain criteria that we look at, be it corporate governance or the balance sheet or past results, whatever it is. Even if we choose mutual funds, there are various criteria we can look at. So can a retail investor possibly select which cryptocurrency they should invest in? Are there any such criteria for crypto as well?
So since you mentioned about equity, right? See,
Right.
so the tricky part about crypto as an ecosystem right now is that there's nobody like a SEBI which says now you are eligible to list your
Right.
equity on a stock exchange, right?
Right.
Now the good thing about it is that anyone can go and publicly start raising funds. But the
Mhm.
bad thing again is that anyone can go and start raising funds publicly, right? So
Right.
what you see, and I don't think the number is actually 90. It could potentially be much big than that. But
Okay.
the point to note is that it's the same everywhere, right? Like, let's say 90% of the startups fail.
Absolutely.
90% of people who want to play for India doesn't end up playing. So it's
Right.
almost the same numbers that you'll be able to see everywhere. But uh, so this is one thing to be careful about, because uh, you have Bitcoin on one hand, which has been trading actively for last 15 years, but someone who launched a token that or created a token 15 days back, or even 15 hours back,
Right.
could
Right.
be, you would be ending up buying such a token, right? So over there, what we suggest, considering the sort of crowd that we have right now, is typically you don't want to take that. So investing in those kind of projects is equivalent to investing in startups in the equity world, which is not
Okay.
listed, which may not be liquid, which doesn't have a proven track record, right?
Right.
So if you want to take that bet, you can still do it. Let's say you have some conviction in the founder, or you have some conviction in the idea, you can still do it. But otherwise, more or less, it's safer to be investing into something that has passed the test of time. For example, Bitcoin for that matter, or Ethereum for that matter. And if you see, these are the tokens where institutions are also investing right now. Right? They're not going after something that is newly launched, right? So I think a good way to look at it is primarily how long it's been, what is the sort of network effect that these projects already have. Because see, anyone can fork, or anyone can create something similar to a Bitcoin blockchain tomorrow, but the network that Bitcoin has established already,
Right.
that is that is where the value comes from, right? See, so I think the one way to look at it is, even that's very common, right? Even in equity, you tend to invest in, the best, because
Right.
these things have historically given you some, better returns,
Right.
and
Right.
because of that, they tend to grow faster. I mean, see, continue growing in the future also. So
Correct.
look at projects that are, listed on credible platforms, listed or have some sort of a track record. And in terms of utility, again, every token has its own purpose, like I was describing initially. And I think in India, the statistics show that people have that inclination towards meme tokens like Dodge and SHIB and all that. But
Right.
and these have no purpose. I mean, it's primarily designed to trick people to, invest into, so that whoever bought it initially, or who has a large
Right.
amount of it, end up making a lot of money, right? And there's no purpose, there's nothing, there's no utility, there's no value that these kind of tokens are adding. So it's a bit important, especially considering, most of the people here are long term investors and don't want to see the wealth, being eroded in these kind of projects, right? So it's important to stick to, the solid ones that has use case, that has a good network, and where there's already some institutional demand also, which means that they believe that this one is going to pass. I mean, again, continue doing what it's been doing in the past, and continue creating that value. So, yeah.
So you're saying just like in equity, we should focus on like in equity, we focus on the bigger companies. So similarly, we should focus on cryptocurrencies that have larger volumes and have been there for a longer time and have given long-term growth.
I mean, yeah, I mean, it's the same at the end of the day. See, we often see there's no harm in, let's say, taking a bet here and there, but
Right. Right.
uh, but we should understand that there is, that 99% that of that, that it can actually fail, right? But if you're looking for something in your portfolio that can be there for next 10 years, 20 years, and then it's very risky to go with something that is newly launched, and you never know how things eventually play out, right? So that's why I said maybe something like an Ethereum or a Bitcoin that has passed the test of time. That makes
Right.
more sense to include in your long term portfolio right now. If you're a trader, it's a different story, right? Because you're not looking at it from a long term lens. But
Long term.
if you're someone who want to put money, leave it there, then ideally you should be looking at, these kind of superior assets. Or maybe a uh, different way to look at it could be in investing into an index, right? Because the index will anyway adjust to how the market is evolving.
Absolutely.
One interesting thing about crypto is that the drop off is extremely high. For example, if you go back
Right.
10 years, I think the if you take the top 10 that was there 10 years ago, only four of them are still in top 10, right? Because
Okay.
that's a kind of drop off that you see in this industry because of high volatility, high competition, high risk associated with everything that these projects are trying to do. So, and the good part about index is that index will anyway adjust, right? The losers are eventually the projects that are not performing well will get removed out from the index, and the ones that are doing well will get added to the index. So from a long term strategy point of view, it makes sense to do something like this, because you don't know, right? Imagine investing into early internet companies.
Right.
You might fortunately you might have invested into a Google or Amazon, but there have been people
Absolutely.
who might have invested into a MySpace also, right? So you
Right.
don't know how the future, or how the future will play out. So to be on the safe side, I think, apart from BTC, Ethereum, still, if you want to have that exposure to other assets, where you want to take a bet, I think index based strategy would make a lot of sense for long term investors.
That makes sense. So uh, now most of us are Zakil, we are most of us, as you can imagine, are mutual fund and stock investors.
Right.
So how do you compare investing in crypto to investing in stocks or mutual funds?
See, I think from apart from the volatility part, uh,
Right.
you know, let's not try to complicate. Like, see, uh, the point is that why do we all invest? The reason why we invest is to, one, we don't want to see the value of our money, dropping. Let's say
Right.
lose money. Typically, it loses its value because of inflation. Now, the reason why we invest is to beat that inflation and make sure that the value of our money is growing over time. Right now, equities by design, it's a way where, let's say, if you're in a country where, we are in a good stage, with what Nifty has been doing is phenomenal, right? So, and historically also, stock market indices have been giving like 10, 12, 15, or inflation beating returns at the end of the, because that's how it's designed, right? So, uh,
Right.
so that's why people invest in equity, debt, and typically it should be a good combination of debt, equity, and gold or whatever, right? Now,
Right.
the way to look at it is look at crypto as an alternative. Look at crypto as a alternative asset class that has a extremely high return potential, because if you look at what Bitcoin has done in the last 10 years or so, I mean, annualized returns of over 60-70%. So that is what this asset class is doing in terms of return. It's highly liquid, unlike, let's say,
Right.
private equity where it gets locked, or like a real estate where
Right.
it's extremely liquid, and you can exit it whenever you want. There isn't much cost in custody and all that. So the way to look at it, from a portfolio lens, is uh, you know see it as a alternative asset class, which should not be, it should ideally be like a single digit a percentage of your portfolio. Right. So,
Wow.
because there is extremely, I mentioned about 60%, 70% returns, but it has come at a very high risk. Now, the
Right.
only way to mitigate that risk is, primarily by limiting your exposure, right? So that, the when the volatility kicks in, for example, I think couple of weeks back, there was a drop of almost 30% in a day.
Right.
Right. So if you're overexposed, let's say if half of your portfolio is in crypto, that is when you start panicking, when that kind of drops happen, right? But on the other hand, if it's 2% or if it's 5%, overall, it need not bother you that much, right? So, the way to look at it is as an alternative asset class, which can enhance that, you know return possibility of your overall portfolio in the long run. So that is how we look at it. So let's say, if you, without investing in crypto, how much money you would have made, over the last 10 years. But if you had invested in crypto, that maybe 2 or 3 or 4 or 5%, then it would have given you, a higher return without having to take a much higher risk, right? So, that is the right way to look at it. And that's what we are also trying to promote as a platform, where, you're not overexposed, so that it doesn't start affecting you emotionally as well. And I think one small thing which I missed out is, it's 24/7, which is very new to,
True.
stock market investors and traders, right? So it's a good thing
Right.
in a way, because even if on a Sunday evening, if you want to sell, you can still do it, which is not really possible, if you're an equity investor.
True. Okay, so that really explains. So basically, what I understand from your answer is that uh, with crypto, the risk is higher, no doubt, but so is the potential return. That is why there should be some investment, but it should be smaller in
Yeah, yeah.
percentage size because it's risky, right?
Yeah, it's highly volatile. It's highly risky. But the question is, have the returns justified the risk? The answer is yes, right? So that is why,
As of today, yes.
yeah, and even if you say it's not, I might be a person who completely invested, or let's say, who has been an evangelist. But let's say, if you look at someone like a Fidelity, which is one of the largest asset managers in the world, so they on their website, they have a all-in-one ETF where they've allocated 1 to 3% into crypto, and they've clearly mentioned,
Okay.
the idea of adding this 1 to 3% of crypto into this all-in-one ETF is that it has the potential to enhance the overall, return of your
Right.
portfolio. So yeah, I mean that is the right way for long-term investors to look at this.
Makes sense. So you mentioned even in so Vakil, I must share that as a community and especially as an individual myself, I am a
Mm-hmm.
hardcore believer in index funds for equity.
Mm-hmm.
In fact, my entire interest into personal finance and investments arose from index funds. And honestly, that is what initially attracted me towards your platform also. Um I had no idea before coming across BitSave that there was something called a crypto index and that we could actually invest in them. So, if in your own words, could you just give us an idea of how BitSave is playing into the index thing and how we can invest in it?
Sure, sure. So, see, the reason why we wanted to build BitSave is, uh, one, uh, every other platform encourages you to trade. Like,
Hmm. Very good
because
point.
they want you to, because honestly that's how they make money. So if you install any app, you at least get 5 notifications a day saying that, take this trade, take that trade, right? Now we all know, the way, I mean, that's like opposite of how, building wealth is, right? Because ideally you should
Right.
be holding long term without being bothered about the market movements. So we realized that there isn't a platform that is designed exclusively for long-term investors in this space. So that is the reason
True.
why we wanted to build BitSave. And secondly, we realized, if we give users an option to, or in our clients an option to go and invest or pick, the best assets themselves, that's a huge risk. Again, going back to the point that I was making, right? Like, let's say, even if you invest in the top 10 today, and if you're coming in with a 10-15 year time horizon, nobody knows, how
Right.
many of those assets are going to be still there after 10 years or 15 years. So we felt, the right way to solve this problem is with the index based product. And that's when we started analyzing, what all indices do we have in crypto, similar to, like a Nifty 50 or a S&P, in case of stock. So we
Vakil, sorry to interrupt, just confirm something. When we talk about equity, index funds are simply a pool of the biggest companies by market cap.
right,
Is that
right.
is that the same with crypto as well?
See, that's what I was coming to. So,
Sure.
we try to, the first step or first exercise for us was to figure out what all options do we have. What all indices do we have. So we have a Nasdaq crypto index, we have an S&P crypto index, then we have Bloomberg crypto index. Now, the challenge that we found with Nasdaq and, let's say, S&P, is that it's similar to equity indices where they just pick the top 10 or top 15 and they put it in the index. Now that is a huge risk in crypto, because, anything can get into top 10 if there is a strong narrative going on. For example, we discussed about meme tokens like SHIB or Doge and all those, right? So let's say Elon Musk tweets about Doge, and Doge goes to top 5.
Right.
And that is a risk that we didn't want to expose our clients to. And that's when we realized that the Bloomberg's index is a lot superior, or it's actually designed for long term portfolios. So what they do is they don't include these kind of tokens as part of the index. They filter out any fundamentally weak tokens, or weak projects that are, even if it's in top 10, top 20, they don't include it part of the
Okay.
portfolio. For example, classic examples being Luna. Some of you might have heard about the, Luna crash, which it went to zero. FTX, which
Right.
is a exchange that collapsed because of mishandling of funds. So, uh, so Bloomberg don't add these kind of projects. So it gave us the comfort that, our clients are not going to be exposed to these meme tokens, or, extremely fundamentally flawed projects. So that is why we decided, it's better that we go with something like that. And we approached Bloomberg end of 2022. We told them, this is what we want to do with the space. And interestingly, in this part of the world, there's no other company, that is giving an option to invest into a premium crypto index.
Right.
And I think even now, BitSave remains to be the only platform that gives you the option to invest into Bloomberg's crypto index. Yeah,
Okay. Okay. Just one more question about particularly your platform.
sure.
While going through your website, there was a very interesting line that I came across, which, and I quote, BitSave is setting new standards in transparency through proof of reserves and on-chain accounting.
Mhm.
Now, from the point of view of BitSave also, and generally also, so that we can understand what platforms to invest with for crypto, what does this line mean exactly?
Sure. So, if we go back to the initial discussion, right, we spoke about the transparency of blockchain, where
Right.
we discussed about uh, how all the transactions are public and verifiable. Now, let's say some of you might have heard about FTX, and the issue with FTX was uh, on the dashboard. For example, if I have an account on FTX and I
Mhm.
put $1,000 into it, on the dashboard I was seeing $10,000 every day,
Right.
right? But the reality was there was no underlying $10,000 because the team was using customer funds to do whatever, to do whatever they want. And the challenge in crypto is at the end of the day, there's no regulator. It's the same that happens with
Right.
banks also, but there you have you have an RBI or you have a SEBI
Right.
to make sure that whatever you're seeing on the screen is actually there, in their custody. Right now, especially post FTX collapse, there was a there basically the community started raising the need for some sort of a proof, because like I said, since if when I say, or let's say if you invest 10,000 rupees into BitSave, and I go and buy Bitcoin and Ethereum for that, now because of the openness and transparency of bits of blockchain, I can actually
Right.
show you that I have that money, that actually belongs to you, but I'm keeping it safe on your behalf. So blockchain gives you that luxury to publicly showcase the fact that your funds are safe with me. So this is something that started coming up after the FTX collapse, and most of the reputed platforms like, let's say, CoinDCX, Binance, they all have started showing their asset side, saying that you can go and verify that we hold this much of assets in our wallets. Now, coming to BitSave, how we are setting the new standards is, the argument against the first side is that it is just your asset side of the balance sheet. Got it.
Right.
So let's say uh, I'm saying that I have 10,000 rupees that I hold,
Mhm.
but what is the proof that I only owe my clients 10,000 rupees? What if I actually owe 15,000 and I only have 10,000? Now, what we do as a platform is that every day, whatever money that comes in and goes out, we record it on blockchain. So our accounting as a company, our accounting happens on blockchain every day. So
Okay.
when
Okay.
whatever you put in,
Wow.
whatever you guys take out, that is recorded on blockchain. So every day you can go and verify on blockchain that BitSave owes its clients a particular amount of money, and you can actually see on the other side of the balance sheet that BitSave holds that much of crypto assets in its custody. So I think BitSave is the only app in the world that gives you this level of transparency even at this point. So that's why we've written that you're setting new standards. Yeah.
That sounds amazing, Zakil. Hats off to you for that. Now, coming back to the environmental sides of things. So, in India, I feel that things get even more difficult with the, I should say, lack of regulation or maybe the confused regulations that we have here. Now, could you throw some light on the current regulations and what we as investors should do to stay on the correct side of the law?
Sure, sure. So see, I think the the reality remains the fact that the service providers in this space are still unregulated. So like a
Right.
bank where RBI has strict guidelines on how to what to do and what not to do. Uh, Unfortunately, for crypto exchanges, crypto investment platforms, there are no such guidelines. Even though
Right.
there are these reporting requirements, TDS requirements, and all that, from a regulatory oversight perspective, investors don't really have that comfort of someone making sure that the platform is not going to defraud you, or they're adopting the best practices, or they're doing things in the best interests of you. Right. So that is the unfortunate situation. We are hearing that the government is actively working on regulating the industry, making sure that there is enough customer protection, measures being, but probably, it's going to take a while, right? Because any bill, any country for that matter, it takes
Of
some
course.
time. From an investor point of view, I think the only thing that you need to do at this point is make sure that you're reporting the transactions as per the taxation requirements. For example, if you're buying and selling crypto in this country, there's a separate schedule in your ITR where you can report these transactions, saying that I bought something on this day, I sold it on this day for this much money, and I made this much profit. So I think that's the only requirement as an investor to do at this point, where you have to report your profits or losses and pay the tax accordingly. Uh,
Okay.
to the listeners, something that you should understand is that Bitcoin or crypto at the end of the day is not going to be regulated. No one can regulate a blockchain. So the regulation is only going to be on the service providers, on the exchange or investment platforms and all that. So imagine this as something like going to a jewelry and buying gold, right? And then you buy gold, you come back home. Now
Right.
the jewelry from which you bought that gold has nothing to do with that gold right now because it's yours, right? Now the
Right.
custody, safety, and all that, it's up to you. So the same way, right now you can go to a platform, buy Bitcoin, move it to a again I know being a bit technical, but let's say you can actually move it to your own wallets, which is completely in your custody. Then you're not relying on a service provider, right? Because you are storing it, you
Mm.
are in control of it. So so to basically buy, yes, you have to rely on someone, but to store it, own it, keep it with you, you don't have to depend on a regulator, because even if crypto becomes regulated tomorrow in India,
Right.
what you can do with it, or how you can own it, store it, that's not going to change, because that is very private, right? So that is where you can actually imagine it like a digital gold, where you have complete control, you have complete custody, and you have complete ownership without actually having to depend on a third party. So that is the only thing. But otherwise, I guess we have evolved as an industry from nothing. I keep saying, like, when I started, there was absolutely nothing from the government. Right now, crypto entities, we're part of Prevention of Money Laundering Act, where you have to
Okay.
report our let's say suspicious transaction, just like any other bank or NBFCs have to do, right? We
Interesting.
have to deduct 1% TDS whenever people sell on the platform. So these guidelines are there. I think the only thing that is left is like a formal act or a bill, which uh, which basically regulates industry. But I think we are moving in the right direction. Yeah.
Hopefully that will also come. And
Yeah.
coming to one more in risk of crypto, like there is the inherent risk of volatility and of crypto, the entire currency dying down. Then there's regulation. And unfortunately, as you also mentioned, we have seen platforms like WazirX, FTX, OKX, and Vault shut down their services.
Right.
So, again, is there any way for investors to understand which platform to go for and which ones to avoid?
Uh, See, obviously, I can't tell you what to avoid, but and obviously, I'm biased here. See,
Not,
let me be. I think what we need to understand is what went wrong with these platforms, right? For example,
right.
Vault, people keep asking. I think one of the most frequent questions that we get is like, how are we different from Vault? Now, the business model of Vault was basically taking people's money, lending it to institutions, earning some interest and paying it back. So it was more like a bank or a FD, right?
And they were
Where
offering fixed
you have
returns, right?
yeah, so there's a counterparty risk of the other borrower not paying and all that, right?
True,
And that's what
true.
actually happened, right? So basically, the money is leaving the system, and there's a risk of it not coming back, and that is where there was a risk management issue where the team was not able to figure it out, and eventually, whatever happened happened. In case of FTX, it was very different, where like I said, you people were seeing one figure on the dashboard, but actually the underlying assets were
Right.
not it was not existing, and it was being used for several other purposes. In case of OKX, I believe it was a regulatory decision because they didn't want to come and register with the Financial Intelligence Unit of India, so they decided
Okay.
it's better to basically stop serving
Wrap things up.
Indian
Okay.
clients. But
Right.
Zirex, as you
Okay.
all know, it's a security breach that happened. And honestly, with security breach, it's a risk that is associated with any platform that you use. But what you need to what you can actually look at it would be, is there an insurance coverage in place, right? Or is it, how much of an assets are being stored in a way which is disconnected from the internet and all that. So ultimately it depends on what your goals are. So just to break it down to people who are listening, if you're a trader, you can opt for a in India, you can opt for a FIU registered exchange, where, for example, Binance or CoinDCX, for that matter, and make sure that it's solely used for the purpose of trading, because you're not building your long-term portfolio or storing your a significant portion of wealth on the exchange. On the other hand, if you are a investor, if you're a long-term investor, I think you have two options. One is go to an exchange, buy whatever you want to buy, and move it to your own wallet. When I say your own wallet, it could be a online wallet, which maybe, if whoever has doubts or whoever is interested, you can reach out to me. I can help you set up these things. So let's say it's similar to a software, it's similar to a banking app, where you can have that custody. And the second option is you can actually buy a hardware wallet, like a pen drive, which
Okay.
where you can store, and it's actually one of the safest way to store your crypto. So this is option number one that you have if you're a long-term investor. Or the option that you have is to opt for a platform that stores your assets in a similar setup, where there is the 100% of the assets are stored in these hardware wallets. It's called institutional custody, similar to what a BlackRock does, in so I hope most of the users are aware. I mean, listeners are aware that BlackRock has a Bitcoin ETF, like so. BlackRock stores those particular ETFs in these kind of devices, which has a regulatory oversight. There's an insurance coverage also in place in case something goes wrong. And in India, again, I'm not saying this because I'm building Bitse, but honestly speaking, in India, Bitse is the only platform that uses such a institutional custody service to store the assets, right? So if you feel it's the whole self custody thing where you have a lot of responsibility, if that is intimidating and confusing and complicated, then you can offer institutional custody, that services like a BlackRock or BitSave provides. So these are the ways you can basically mitigate that risk of, let's say, a cyber attack or platform going around. And I already explained, right? We don't lend funds, so there's no counterparty risk that is associated with the products that we offer. And uh, unlike an FTX, you have that visibility over the funds also on BitSave, that funds are there, and you can actually go and verify that we hold 100% of the funds at all times. So I mean, see, there are other transparent, legitimate platforms as well. So, depending on what your use case is, what kind of an investor or a trader you are, you can opt for them. Yeah.
So Sakil, thanks for answering all our questions. Now I have two rapid fire questions for you.
Mm-hmm.
And if you think for the benefit of the listeners they need to be elaborated upon, you can do that.
Sure.
Otherwise, let's keep them rapid fire. So
Sure.
the first is, what are NFTs and do they have any value for investors? or can they be ignored for the point time being?
See, it's to I think if you're if I have to explain as a 5-year-old, it's similar to these cricket cards that we had, right? But in a digital format. So it's fun to play with. We all
Right,
paid for it, right? We all paid for it,
right.
but is there a value or a value beyond that? There is a question. So most of the NFTs are just like that. But let's say there are things with utility where holding it gives you special access to events, for that matter, right? So
Okay.
things like that can have a utility, and then let's say you attended 3 events, and then you're like, I don't need it anymore, and now there could be someone else who want to have that NFT and start attending events like you, right? So then you can potentially exchange it for some value. So it's like there's a digital ownership in place. This utilities that can be but it's all, I think it's in a very early stage, honestly. But
Right.
most of it, they're just like playing cards, if you ask me.
So as of now, I feel that most investors should just bypass them completely.
Uh, Unless there's some utility, or let's say, consider it something like art, right? Like, let's say if you were
Right.
paying 50 lakhs to something and I don't see a value, but you see value, right? It's a very personal thing. It's very
Correct.
perspective driven. It's very subjective. So don't invest into it expecting someone is going to come back and buy it from you on a, at a higher
Right.
price. But if you want to support an artist, for that matter, or if you feel that holding this is
Uh,
going to give you
that
something of
makes sense.
value, for example, I think a couple of years back, Amitabh Bachchan had sold an NFT, which gave him or gave the buyer of the NFT an access to spend a day with him or something. So let's say if I
Okay.
value that moment, and it's very
Right.
personal, right? I mean, there's no point
Right.
in someone
True.
else saying that it's not worth it that much, because for me, it's worth it. So then it makes
True.
sense, right? But otherwise, as a investment, as a long term investable thing, I don't think it really makes sense at this point.
Fantastic. And just one more question. So in India, we have ETFs of various indices. And
Right.
as far as I understand, in US, we have ETFs of various crypto indices as well. Is that correct?
Crypto indices ETFs are just coming up.
Okay.
Currently, it's mostly single asset ETFs. For example, we have a Bitcoin ETF that is the
Okay.
popular, and it's actually the fastest growing ETF right now in the history of ETFs. We have Ethereum ETF coming up. We have Solana ETF coming up. The index based ETFs, I think the number was very less. I heard that Franklin Templeton just filed for a index ETF couple of days back. So index base is still picking up, but single asset ETFs, it's actually growing like anything.
So what I want to ask you is, let's say, as you said, there have been some filings of for index ETFs as well. So let's say there is an index ETF on the US exchange tomorrow.
Sure.
So are you? I just want to confirm from what I have understood from our conversation. Uh, for US investors, that ETF is there, and that is what you have created in India for us. Or is there any difference?
What we've created is not an ETF. So ETF is basically something that is being traded on an exchange, right? ETF is
Of course,
exchange
of
traded
course.
funds. We have created just the fund part of it. Our products are not being traded on any exchange currently.
No, I
Uh,
understand the
but
method is
but
different, but the investment
from a
would be same, I
product,
guess.
yeah, from a product perspective, it's the same. Like, it gives you the same exposure. It gives you the same security. uh, I think the only unfortunate thing, even though we want to be a regulated company, unfortunately we don't have an option to do that. But
Right.
we are in the process of being regulated, in a foreign jurisdiction. So that details will be
Okay.
releasing, very soon. So that should also give you a sense of, I mean, comfort of regulatory oversight also of regarding BitSafe products. But from a product design perspective, it's all the same thing. The idea is to give you an exposure to a basket which is selected by Bloomberg with utmost security for the assets that you store with us. And on top of that, we give everyone a relationship manager, everyone investment planner to help you, guide you at every step. So, we try to spend more time with our clients, making sure that, they're comfortable, they're understanding what they're doing, and also most importantly, making sure that they don't overinvest. Like I said, right, that's where
Right.
you start panicking, and, so that is something that we very much try to help our clients with.
So, Nikhil, I have a final two questions for you, and these are the two questions we always end our live podcasts with. The first is for people listening to you for the first time. Uh,
Hmm.
as I mentioned in the beginning, we are a strictly action-based community, and
Hmm.
we believe that knowledge does not really amount to much if it is not acted upon. So, and assuming that we are all absolutely zero with knowledge of crypto and we don't know anything about it, so what is
Hmm.
the one small action step that you can suggest that we can
Hmm.
take today to become
Hmm.
successful crypto investors?
Interesting. So I think uh, I see if you're referring to what to read, or or let's say some
Yes, that
materials.
would
I
be a
think
great starting point.
CFA. There's a paper published by CFA Institute. I think it was in 2019. It's a great paper. I think it still remains to be the most downloaded paper
Okay,
published by CFA Institute. So it's on Bitcoin. So that is something that will give you an idea of how what is basically what the technology is all about, and how it can fit into your portfolio, and how it can enhance the returns in your portfolio. So that could be something that all of you guys can go, and maybe I'll share the link with you. You can share it with the community as well, right? And one thing which I
that will be
request
fantastic.
everyone to do is, uh, you know, I know there's a lot of skepticism and all that, but if you can start looking at it from an open mind, and I know as a community, on one side you keep hearing that, this is going to replace everything in the world, and that is
Right,
all that, and on the other side you see someone like a Warren Buffett saying that this is rat poison square and all that. But the reality may be something in between, right? Where
right,
this is a solution to a lot of issues, and maybe not extreme, but still, for example, see, fortunately we live in a country where there's UPI, where there's a
right,
with a stable financial system. But the reality is it's not the same in so many other countries, right? If you go to Turkey, the sort of inflation that they're dealing with, if you go to African countries, they've lost trust in
right.
their currency system, right? So that is where actually these kind of political currencies, which are not really dependent on institutions, which are not dependent on government, that is where the real use case is actually happening. And the reality at the end of the day is that Bitcoin was created for a particular purpose in 2008, 2009, and so far last 15 years it's been doing it regardless of whatever people are saying.
True.
Right. So the request that I have is to start looking at it from a technology perspective with an open mind. Not necessarily to start investing in right one, but if you ignore it, I think that's a risk that people might be taking. Start to understand beyond all the noise that you see on social media, and all the high returns, but maybe 1% of it, 1% of your portfolio can be allocated something like an insurance, right? Like in case
Right.
everything around you from a monetary perspective collapse tomorrow, this could be that one thing, if it works out, that can protect you, right? So I think maybe start looking at it from a with a bit more open mind. That would be really good, for all of us.
That's a very good point. You mentioned that not investing is a risk in itself,
And
and
I'm saying it's just 1%. I mean, I'm not saying,
of course,
you should sell your house and put money into crypto, but
absolutely, it's
that's why
it's
I said,
insurance at
just
best. Yes.
maybe look at it as an insurance premium. We all take
Right.
that insurance premium for our houses, right? Not necessarily that we believe the house is going to be under fire tomorrow, but
True. True.
it's something that we do to protect ourselves. And I think, if it works out, it works out for all of us. But if it doesn't, then it's just 1%. It's not going to, make a lot of difference to our portfolio.
True. So the downside is limited. The upside can be
Correct, correct,
huge.
correct, correct. Exactly.
Okay, so the last question is that as you also very greatly mentioned that you can help people set up their uh, online and physical wallets. So people who are looking forward to learn more from you or about your company, what is the best way to reach you?
I'm on pretty much all the social handles. It's Zakil Suresh. The username is Zakil Suresh everywhere, and I think it's a very unique name, so you won't find any other people. So it'll be much easier to find
Right.
me. You can DM, LinkedIn, Telegram. I'm also part of your community now, so you can reach out on Telegram, WhatsApp, wherever it is. Happy to chat and help you get started or clear any of the doubts.
That is so kind of you, Zakil. Thank you so much for being with us for over an hour, and thank you so much for all our listeners too. I loved how you explained step by step how crypto came into being, how we are surrounded by crypto even today, and how we can actually keep our investments in crypto safe. Thank you so much for being with us. Stay in touch, and
Sure, sure,
that's it
sure.
for our so that's for our
Thank you.
conversation.
Thank you.
So
Thanks for having me. I truly enjoyed it.